All right, yo, what up for y'all on the YouTube replay? What a great day to be a shareholder of stocks today. I wouldn't want to be super cash heavy right now. And if you are really cash heavy, don't worry about it. Maybe sell some calls or something. But what a great day to own stocks. Let's go see how the market's doing. So look at this. The Qs are up 1.82. The SPY's up 1.6. Literally everything on the watch list screen. I mean, what is down today? I guess Norfolk Southern. But check this out. I'll give you a quick portfolio update. Then we'll get to some of y'all stocks we'll look at. Here's us on the day. We're up 2.55% on the day. Year to date, we're up 13.7%. So we're doing pretty good year to date. We also have a Roth IRA. I did make some changes to my Roth IRA, by the way, guys. I actually decided to buy one share of Microsoft. So now I own one share of Microsoft. It's like the perfect buy, never sell company. But hey, look at that. Every stock in here is green on the day. What up, Plasma? Hope you're having a great day with this market rally. Look at that on the week. So yeah, our main account, main taxable is up 2.5. This is our dividend growth portfolio. So every stock in here pays a dividend. Then, of course, we have our Moomoo portfolio. This one is going berserk. We're up 2.95% on the day. New all-time high. So this is a new all-time high in this portfolio. If we go to year to date, we are now up 47% year to date. I mean, pretty crazy. And here is all our stocks on the day. Luckily, every single stock in here is green on the day. Powell Industries is up a crazy 7%. Comfort Systems is almost at an all-time high. They're up to $712. Again, great news there. So yeah, and then finally, here's our coolest portfolio right here. This is our risky portfolio. Hopefully you can't see my password there, but wow, we're up 3.2% on the day. We're up 18% all time. And I just like being fully transparent. I'll show you my return on every stock in here. We had one company report earnings today, this morning, or maybe it was last night. I don't remember, but it was Zoom Communications, one of our huge losers. We're down 47% on them, but they're up 10% on the day. So we're getting a little bit of growth back from that company. Great news. But let's see, is anything down on the day in here? T-Mobile's down, Sprouts Farmers Market down, no big deal because we're having a lot of green from. Oh, FUTU stock is closing in on a new all-time high, which is great. So yeah, these are all the stocks that we own in here. Dang, SoFi's up 7% on the day. No way. Is that a new 52-week high? Look at that. New 52-week high on SoFi today. So yeah, congrats if you own that company. Yeah, hey, what up, Plasma? We'll look at Marvel Technologies. Yeah, if you guys got any stocks you want me to look at, let me know. I'll check them out here in a minute after I'm done with this portfolio update. And yeah, let's see what's up the most on my watch list today. Ubiquity, Zoom, Herc Rentals, nothing really too big of a deal. Yeah, it's a good day when you go to what's down on the day and it's all like the inverse QQQ ETFs and stuff. Dang, Monster Beverage is down a little bit. But anyway, yeah, let's look at some stocks here. Yeah, let's look at Marvel Technologies right here. This is one of the cheaper chip plays out there, MRVL. Yo, invested '09. What's up, man? Hope you're having a good day. Hey, if you own stocks, you got to be having a great day. Wait, Doughboy said, I invested a ton in Ramco stock. I'm up 130%. Yo, Doughboy, I can check that stock out for you. Give me the ticker symbol and I'll check it out for you. So yeah, here's Marvel Technologies. So this company just went net income positive, which is great news. They design, develop, sale of integrated circuits is kind of what they do. I had to put it in very simply. But look at this growth. I love companies with good fundamentals. And look at this one. The revenue's up 63% year over year, and the net income was $200 million. So look at this. They're now making, $200 million every quarter. If we zoom out on Marvel, they were losing a couple $100 million of net income a quarter. So this is great news. And they're expected to keep on making net income pretty much for the rest of the time. So, I don't know about that, but they're expected to make another $200 million plus next quarter, $200 million plus the next quarter. So they're expected to keep up this net income positivity, which is great news, especially because they pay a dividend. They got to pay that out somehow. So yeah, definitely having a good day. Set some limit orders yesterday. You might have seen, but haven't went off yet. Yeah, on like Astera Labs and stuff. I saw that. Yeah, I saw your comment. Yeah, I'm streaming on both YouTube and TikTok right now. What's up, guys? Open Door is crazy right now. I'm kind of wishing I FOMO'd in yesterday. Well, the thing with Open Door is this stock right here isn't a well, dang, yeah, they're doing incredible. But I think this one's all meme and kind of momentum. I'm staying away from this stock personally. But this one could still do good, but I'm going to just stay away from it. This one's really begging for a lower interest rate environment. They do like just 1 to 1.5 billion of sales a quarter. Well, if we go back to 2022, 2021, when there was zero rates or the interest rates were zero, they were printing money. I don't know about net income. What was the net income? Oh, they were not making net income at that time. Dang. And they're still not making net income, but the losses have narrowed. Look at that. They only lost 29 mil this quarter. Great news, them narrowing those losses. I think they just got a new CEO as well. Yo, what up, Mozart? He says MMC. Yeah, we can look at United Health as well. So I haven't heard of this company before. So this is Marsh and McLennan. Is this like an education company? I'm not too sure, but let's go see what they do. So risk and insurance services. So they're an insurance provider. And look at that. The business is up 15% year over year. These are great year over year growth rates. So yeah, the risk and insurance business, and they're in consulting. How's that business doing? That's up 6.9% year over year. Not too bad. So both main segments are growing there. Half the revenue comes from the US. Let's see the net income though. The bottom line is, they're nearing in at $1 billion in net income a quarter. Yo, user 442. I really appreciate that. Yeah, we'll look at CMI as well. Yes, sir. So yeah, I love this one. They're making a couple billion, or pretty much a billion every quarter if you average it out there. You get a 1.5% yield. Look at that. They raise their dividend every year, 37% payout ratio. So that's a pretty cool company. MMC, I can see why they're doing so good. So yeah, let's look at United. What app is this? Yeah, hey, Linktree and Bio first link there. So it's a brokerage. But UNH, let's check out UNH. This one just got bought by Warren Buffett. So if you're wondering, whoa, what's this huge green candlestick there? It's solely from Warren Buffett buying. And Warren Buffett, what interests me is he actually bought around I think it was average was $314. So, it was only just then that he disclosed it, but he bought a bunch of UNH around this day right here at 314. And it was just disclosed that day that he bought it. So if Warren Buffett buys into something, usually he does a lot of research, a lot of due diligence. And yeah, yo, Josh, he said, Powell pumped my portfolio 12% today. Yo, I know you got a lot of the crypto stuff. I'm glad to hear that, man. So yeah, look at UNH right here. The PE is a 13, and that's because the future is so uncertain. If we go look at the EPS right here, look at this. It's expected to go to $1.70 in 2 quarters, and that's can't even afford the dividend at that point. So I can see why this one is such a low PE, but they're still the industry leader. You still get a 2.8% dividend yield. We use the OptumRx. We're a customer. Look at this. OptumRx is a huge portion of their business. It hit a new record, up 19% year over year. That's huge double-digit growth. But again, we're watching the margins on there. There's a lot of government regulation around them with the fraud. They could get kicked out of Medicare and Medicaid. Yo, what up? Muritzbeck Murrah, how's it going? Hope you're having a good day. Yeah, man, we're having a great day. We're up 2.8% in this portfolio right now. So let's look at CMI stock. I believe this is Cummins. They're like a automotive engine company. And look at that all-time high on this company. This has been a phenomenal dividend growth stock. They have a huge yield. So check this out. Not only is the stock at an all-time high, but even when the stock's at an all-time high, they still have a 1.8% dividend yield. And they raise their dividend every year. And they have a very fair, very safe 25% payout ratio. So there's a lot of room for them to raise the dividend. Look at this valuation. I mean, this company is literally trading at 19 times net income. The industry average is a 31. I mean, who are their kind of competitors there? Oh well. But yeah, we can kind of see the different businesses. I love how we can see the different revenue streams, like engines, like I said, components, power systems. So they're kind of in the aerospace industry. You look at the power systems business. It's up 20% year over year to a new record. So I can see why this stock's at all-time highs. And they also, if we go look at the bottom line, they print money. I mean, they made $1 billion this quarter, $850 million last quarter of after-tax net income. So they're just an insanely profitable company that is growing like crazy. Congrats if you own that one. They're at all-time highs. Someone said Google. Yeah, let me pull up Google real quick. That one is in my portfolio. Look at this today. We're up 2.5% on the day. Close to an all-time high, not an all-time high yet, but we did hit an all-time high in our Moomoo portfolio. But anyway, let's look at Google right here. Google just, if we kind of read right here, Meta just signed a $10 billion cloud deal with Meta. So Meta is now going to pay over Google well over $10 billion for their cloud services, which is pretty crazy. And here's what I love about Google. They're pretty close to an all-time high. And here's why I think they're going to continue to keep hitting new all-time highs and stretch up a little higher. I mean, look at this PE. The valuation's a 21. I feel like this company has the ability, it's a Mag 7 company. It's Google. I feel like they could stretch up to like a 24, 25 PE before it really starts to get stretched and overvalued. So I feel like this one could continue to keep hitting new all-time highs. And yeah, speaking of the Google Cloud business, which Meta just signed a $10 billion deal for, this is huge. I mean, look at the growth of the Google Cloud. It literally just hits a new record every single quarter, every year. I mean, Google is literally like an ETF in one. They have the search business. They own YouTube. They own Android. Kindle. If anyone's heard of the Amazon Kindle, They are now use Android. The whole Amazon little tablets and stuff used to use their like own Kindle Fire operating system. They now use Android. It's pretty cool. Anyway, look at this. They're printing net income. Look at that. They're making 20 to 30 billion of net income every single quarter. What is Google doing with all this net income? Well, check this out. Here's the best part about them is the amount of buybacks that they're doing. They literally spend 13 to 15 billion dollars in net income every quarter solely buying back their own stock. And here's what that does for you as a shareholder. So look, the net income is up 19% year over year, but the net income per share is up 22%. Anyway, Google's like the perfect buy and never sell stock. I'm gonna get you to 1K likes. Hey, thanks, Josh. I appreciate that. Yeah, if y'all want to hit the like button, I appreciate that. Yeah, what up, Felix? Yeah, stocks are up. JVM, yo, stocks are going crazy today. Jerome Powell saved us. We're up on every stock in this portfolio today. Here, for all the new people in the stream, I'll show you this portfolio really quickly. I just love being fully transparent. Of course, I have nothing to hide after today's really green day. We're up only 18% all time in here. I definitely haven't outperformed the market, but we're having a great day. I mean, Zoom's up 10%. These are all the today's performance. SoFi's up 7, Robinhood's up 5. So we're just having a great day in this portfolio. All right, let's see. Thoughts? Yeah, I love Google, man. Let's see. Oh yeah, check GE Aerospace. Yeah, what up, YMN? I got you. So this is another, great aerospace and defense play. I mean, this is like a perfect buy, never sell stock. I mean, there's so many barriers to entry if you were trying to compete with GE Aerospace. I mean, they have this commercial engine repair and servicing business, which is like their best business. It's up 30% year over year ever since the spinoff. I mean, the management has really been able to focus down on this company, and they're in the defense and propulsion tech. That's up 7% as well. But anyway, look at the best part about GE Aerospace is the margin expansion. It's just the growth and the margin expansion. Look at this. Revenues organically up 21%. So look, revenues up 21, but net income is up 59. So what does that mean in English? Basically, they're expanding their net margins. They have pricing power. They grew their net margin by 31% year over year. So that's how they made $2 billion of net income this quarter. So I love GE Aerospace. And they've bought back 5% of the shares in the past year. Geez, man, that's a great company. So yeah, that one's yo, Two Trick, what's up, man? Hope you're having a good day. We all are with how green the market is. So yeah, Webull stock. Yeah, ticker symbol BULL. So check this out. I do have a Webull account, so I've probably given them a lot of transaction fees. So yeah, here's my actual Webull portfolio. So this stock right here is that brokerage publicly traded. And they just IPO'd, so we don't have too much data, but here's what we do get. I mean, the revenue's up 31% year over year, and in the 2 most recent quarters, they made net income. So I made 13 mil in net income this quarter, 10 mil last quarter. So at this rate, let's hope they can keep that up. Hopefully they can trade like a Robinhood one day where they're making a bunch. They got out of the crypto market, so they're just now getting back into it. That's why Robinhood's doing so good. That's why Robinhood stock tends to follow what Bitcoin does, because like half of Robinhood's revenue comes from crypto transaction fees. So that's why Robinhood stock is kind of like a pseudo crypto. And let's hope that Webull can kind of get in that position one day. Yeah, here's Robinhood stock, all-time high. Another stock I probably like more than Webull is actually FUTU stock. This is another brokerage, exact same industry as Webull. And look, it's all three of these apps right here publicly traded. So here's FUTU stock that's up on the day. So yeah. Anyway, let's keep going here. If you guys got any stocks, let me know. Did you buy or are buying the UNH? No, I don't own any UNH, and I'm not really looking to buy them. But let's see. Not yet. After the Warren Buffett huge gap up, I'd want to see UNH kind of go below that before I put a meaningful amount in them. But anyway, let's look at Palantir right here. Yeah, let's do it, Orte. So did I buy the Palantir dip? No. But I will show you why I love Palantir right here. And they deserve to be close to all-time highs. They deserve to be this growthy. I mean, the valuation is pretty expensive. They're trading at 111 times sales. So not 100 times net income, but sales. But here's why they deserve the high valuation. Look at where the revenue comes from. 55% of the revenue comes from the government. So many police stations are using Palantir in their data, their software, and this business is up 49% year over year. Incredible new all-time high. And the commercial business as well is at a new all-time high, up 46% year over year. These are incredible growth rates. They just had their first ever $1 billion quarter. They did exactly $1 billion of revenue. And on that billion of revenue, 330 million of that was net income. So they have incredible margins. They also have a freaking fortress of a balance sheet. So Palantir actually has no debt at all and $6 billion of cash. up from 4 billion the previous year. So here's Palantir, super growthy, debt-free, lots of cash, printing money in the industries all investors want. So they're just an incredible stock. What happens is, hey, Janez, this is a brokerage right here where you buy stocks and stuff. If you want to get it, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you sign up, we'll both get some free stocks. But anyway, can you look at FAAS? Let's check out this one. I haven't heard of this one before. So yeah, we don't really cover these kind of stocks on the channel here. So if you look in the top right, these are just too risky. I mean, look at the market cap. It's an $18 million market cap. So you just can't trust this company. The whole entire company is worth $18 million. So yeah, and I don't know if we'll be able to look at their financials either. That's weird. Anyway, they're probably losing a bunch of net income. Yeah. So anyway, would I buy this one? No, we're not even going to look at them. So yeah, let's see. But we'll check out this one. SRXH. SRXH. Let's see what this one is. So SR Health. So yeah, this is another. Yeah, I just can't trust these companies. You know, it's a $12 million company. Stocks at an all-time low, and they lost $1 million this quarter. They just IPO'd or something. There's only one quarter of data here. That's really weird. Yeah, I just can't trust that. Yeah, no problem. How do you Big Bear AI? What's the ticker? Yeah, give me a ticker symbol if you got a stock I'm gonna look at, like JP Morgan. I think that's JPM. Let's see. JPM. So yeah, here's JP Morgan. Yo, what up, Cruz? Hope you're having a great day, man. Jerome Powell saved us. So yeah, we'll check out that stock too. So here's JP Morgan. This stock is pretty much at an all-time high right now. And look at this. Here's what I love about the bank stocks. You know, they have a nice yield. So even though the stock's at an all-time high, you get into your 2% dividend yield and the payout ratio is only at 25%. So that's a really good yield. What's the actual price to net income on this company? The PE is a 15. Industry average is a 13. You know, that's all right. So yeah, commercial and investment banking, consumer banking, asset and wealth management. How's that business doing? It's only 13% of the revenue, but I want to see what it is. Sorry, my Wi-Fi is kind of slow right now. I wish this would, maybe we can't see it. Oh, well, I guess we'll come back to that. Oh, there it is. Hey, it's up 12% year over year to a new record, actually. So pretty good. So anyway, let's go look at the bottom line here. This is what's so crazy about JP Morgan. I mean, they literally made 15 billion in net income this quarter. I mean, look at that. They're making like 14, 15 billion in net income every single quarter. So, and that's in USD as well. That's incredible. How about the Honest Company? Oh yeah, hey. I want to check that one out too. What up, German? MRVL. So yeah, this is one of it's like, I think the cheapest chip play out there, like cheaper than Nvidia, AMD. So, but between GitLab, Marvel, and Futu, probably Marvel would be the best buy, and then Futu. GitLab is, I don't know, I need to do more research on them. But check this out. Here's what's so cool about Marvel. They're now actually making a bunch of net income. You know, 200 million the past 2 quarters. And if we look at the analyst expectations, you know, they're expecting them to continue to make just 200 mil plus in net income every quarter, which is great news. So this company's net income positive from now on, and it's super growthy. I mean, the revenue's up 63%. I mean, that might be better than NVIDIA's and AMD's. I don't know yet, but this is really good revenue growth. So I think there's just more upside potential here than on NVIDIA. So let's see. Yo, what up, German? What's up, man? So let's see. CAT stock. Yeah, Caterpillar. Let's do it. Yeah. So here is Caterpillar stock. This is another great dividend growth company. So check this out. They're pretty much at an all-time high. And even though they're at an all-time high, still has a nice yield, a 1.3% dividend yield. So 1.3% yield. And look at this PE ratio. The PE is a 22. So I feel like at this multiple, you know, 22 times net income, industry average is a 21. I feel like they have the ability to like stretch up again to like a 25 PE before it really gets overvalued, because a 22 PE, I mean, that's not exactly like crazy expensive. And here's what industries they're in: energy and transportation. They're in the construction industry, and then resource industry, like big mines that need heavy machinery and stuff like that. They're making over 2 to 3 billion in net income a quarter. So Caterpillar is one of my favorite dividend growth stocks. So let's see. Wow, everything is up today. Yeah, Cherry. So Fibio said Amazon stock. Yeah, yo, let's check out Amazon. So this is one, look, I bought the dip on this one right after earnings. It tanked on earnings. So I bought one share at $214. This is another great just buy and never sell stock. Another margin expansion story. The cloud business, the AWS is actually the most valuable part of Amazon. The Amazon Web Services brings in the most amount of net income, brings the most bottom line in. But look at this. It's over 107 billion of annual revenue for this company. Like a lot of people just know Amazon for their website, but they're really a huge cloud play. They're the largest cloud play, bigger than Microsoft and Google Cloud. So look at the net income they're printing right here. This is the best part. I mean, revenue is up 13% on Amazon. So revenue's up 13, but net income, the profits are up 34. So that means they're able to grow this net margin right here. Now double-digit net margin. They have a fortress of a balance sheet, deleveraging as well. You know, the liabilities used to be 57% of the assets. Now it's only 51. And here's honestly the best part about Amazon. Oh, look, there's the shareholder. Jeff Bezos owns 8.3% of the shares, but it's the cash from investing activities. They're so innovative. They deployed $39 billion investing in new assets, just investing in the company to get a return on. So they're just so growthy, so innovative. I love them. How much are you up all time? Well, it depends on the portfolio. This portfolio specifically, I could just show you right here, and this is on a return money weighted. We're up 114% all time in here. It's a new all time high today. So I'm so grateful today. We're at an all time high today. So yeah, someone said Novo Nordisk. So let's do it. So shiny cardboard. Thanks so much for the rose there. Yeah, we'll check out VRT after this. I got you. Oh yeah, then we can look at the honest company. Sorry if I don't get to all the stocks here. I want to get to all of them. But here's Novo Nordisk. This is that weight loss prescription company. So they own, you've probably heard of Ozempic. Elon Musk is on Ozempic. You've maybe heard of Wegovy. And look at this. 94% of this company's revenue comes from their obesity care products. And they're printing money right now. I mean, they're making $4 billion plus in net income every single quarter. It's pretty ridiculous. And you get a nice yield here, a 3% yield. One reason, though, they have been struggling recently is because the patent for their GLP-1 Ozempic expires in a couple years. I think 2 years. So that's one thing that is unfortunate. But for right now, the company's great. So thanks, Ivan. Someone said Nathan Robert _1 is pretending to be me. Yeah. Hey, by the way, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course, book. I sell nothing. Just on here, give my opinion. The only thing I do have is a YouTube channel. But just know, there are people impersonating me. Watch out for them. I'll never follow you, DM you, ask you for anything like that. So anyway, here's VRT stock, Vertiv. I think this is another server rack company, kind of like a super microcomputer. Let's go dig into their details here. So 80% of the revenue comes from their product sales. And look at that. That's really good growth. It's up 39% year over year. I mean, that's the kind of growth you want to see. New record sales there. What about the service revenue? Yeah, as well. That's the highest growth we've seen like ever, up 19% year over year. So both main segments of business are growing like crazy. And look at the net income. I mean, just another new record net income quarter, 330 mil in net income. Did that beat the expectations? Yeah, so look at this. Here's why the stock has gone up so much. They're beating the analyst expectations. That's the orange line there. So they're beating on revenue. They're beating on the huge 10% plus beat on net income and on EBIT. So it was a triple beat quarter. Great company. Hey, thanks, Supreme. I appreciate that. I'm going to follow you on YouTube. Hey, yeah, thank you so much. Let's look at the honest stock. And by the way, I'm streaming on YouTube as well. That's actually the best way to support me. So if you want to watch the stream from YouTube, I'd really appreciate that. Dude, no way. Shiny cardboard. That's my first ever Galaxy. No way, dude. I really appreciate that. If you got another stock you want to look at, Shiny, let me know that, you just made my day a lot better. I really appreciate you, Shiny. He just did hey, and what up, Ed Music? How's it going? So let's look at the honest company right here. So the honest company, this is a micro cap. It's only a $450 million market cap. So pretty small still, but they're up 10% on the day. So great performance today. Hey, Shiny, thank you so much, man. I really appreciate you. Let me know if you got any more stocks you want me to look at. I got you. So thank you. I'm going to give you a follow, actually. But anyway, let's see here. So look at the honest company. I think one thing investors were a little disappointed about was just the slow growth of the company, like the lifeblood of the company, the sales. Look at this. The sales were only up 0.4% year over year. So sales are only up by 0.4, but best part is that they're making that income every quarter, a good amount of it. For a $400 million company, if they can keep this up and make $4 million a quarter, that's great news. And plus, I believe this company is debt-free. Yeah, they have no debt and $72 million of cash. So kind of think about that for a second. They have no debt, $72 million of cash, and the whole company is only worth $451 million. So a huge chunk of their market cap is just cash on hand. So But I would want to see the growth come back. They just sell a commodity. I think literally like 60% of their sales come from diapers and wipes. If I zoom out here, I think it should show me. Yeah, look at that. 65% of their revenue comes from diapers and wipes, then skin and personal care and household and wellness. So anyway, I want to see the growth come back, and I think there's no chance of bankruptcy there. No, hey, Cruz, no way. Hey, shout out to Cruz. He just did a $1.99 super chat. No way, Cruz. Thank you, man. I really appreciate you. Yo, I'll show you my main portfolio right here. How are we doing on the day now? So we are up 2.44% on the day. Let's go. We're having a great day. So let's see here. Google's up 2.5. Here's our total percent change on every stock. So we're up a good chunk on every stock now. So Josh said super microcomputer. So yeah, we were just looking at VRT. I think they kind of compete with super microcomputer. I'm not sure. I've been really disappointed with super microcomputer. And here's why I'm not buying the dip yet. To be honest with you, I'm not going to buy the dip on super micro until they're under $40 because there's one little metric that scares me here. If we go to the revenue right here, look at this total revenue. So the kind of think about this logically here, the revenue's up by 7.5%. So revenue's up 7, but the profits, the net income is down by 31. So that means the margins are falling. Margins are down by 40%, not great. So because they're giving customers bulk deals and stuff. So I'm waiting to buy the dip on that one a little longer. Yo, hey, EQIX, this is a really cool stock right here. This is a huge data center company, I believe. So this is Equinix. Maybe I'm thinking of Equifax. I don't know. I believe they're a REIT, a real estate investment trust, and or maybe not. Let's see. Co-location is 70% of the revenue, and that's up 6% year over year. Let's see. What about interconnection as well? So that one's up 9% year over year, huh? So interconnect and co-location. Let's just go look at the profits right here. So the revenue's up 5%. They're making, they had a little one-time adjustment this quarter. It says they lost 14 million, but they didn't actually. So they're making the operating profits up 20% year over year. Co-location. I wonder what digital infrastructure company. Yeah, they are a REIT. So yeah, data center REIT. That's what I thought. So yeah. And that's why the yield is so high on this company, and it's sustainable as well. They have a 2.23% dividend yield. They're a real estate investment trust. They actually have to, by law, pay out 90% of their taxable income in the form of a dividend. So got a new follower. Thanks for the honest company review. Hey, thanks, Hugo. I really appreciate that, man. Thanks so much for showing up to the YouTube stream. So someone said Symbiotic. This is a very cool company. This is a warehouse robotics company. And if I wanted exposure to robotics, I'd stay away from the Serve Robotics, stay away from Rich Tech Robotics. If you wanted real exposure to robotics, you'd only buy two things. You buy Amazon or Symbiotic. And Symbiotic is a great warehouse robotics play. They have over 1,500 patents. They have real IP and real growth. Look at this. The revenue's up 25% year over year. They're still struggling with net income positivity, but they're barely losing any money. And with this crazy growth rate of the sales, it doesn't matter that they're losing money right now. But honestly, the best part about them is actually their relationship with Walmart. Walmart actually owns 13.5% of all the shares. So Walmart is the second largest shareholder, and it's also their main customer. So Symbiotic helps Walmart out with their logistics and warehouses, replacing employees and stuff. So anyway, that's a cool robotics play. Of course, behind Amazon. Amazon isn't a pure robotics play, but you still get that exposure. All right, Apple stock. Yeah, let's do Apple stock. What up, the real? AAPL is the ticker symbol. So yeah, Apple, I'm on an iPhone right now. A lot of people are locked in the Apple ecosystem. And this is another great just buy and never sell kind of stock right here. Check this out. So we can see their smartphone market share, huge market share, 19% smartphone market share. iPhones are literally half the revenue. So look at that. 47% of the revenue comes from iPhone. Then the services business. This is the most valuable part of Apple. Well, kind of, but whenever you go buy something in the App Store, like you go spend $100 on Clash of Clans or something, $30 of that goes back to Apple as a high margin royalty. So the services business is crazy. And if we look at this, it's 96 billion of annual revenue for them, and it's going to hit over 100 billion next year. Then they have the Mac sales, the wearables, the iPad. And look, here's why Apple's also affected by tariffs. Did you know that only 36% of the revenue comes from the US? I always thought it was more than that. 25% of all the revenue comes from EU, then China, and then all these other countries. So anyway, Apple's another great just buy and hold forever stock. They also are crazy with share buybacks. So look at this. Here, if you take one thing away from the stream, it would be this right here. So look at this. The net income is up by 9.3, but the net income per share is up by 12. That's thanks to the share buybacks. No way, Shiny. Dude, Shiny with the second galaxy. Dude. All right, one more for good luck. Dude, Shiny. Thank you so much, man. I'll never forget you. I really appreciate that, man. So yeah, so if you're wondering, like, how did the net income per share go up by 12% when the net income was only up by 9%? Well, check this out. Here's the best part about Apple. Look at the amount they're spending on share buybacks. They literally spent 21 billion just this quarter solely buying back their own stock. 25 billion last quarter on share buybacks, 23 billion. I mean, they just buy back their own stock like crazy. It's ridiculous. So that's how the net income per share is up way more than the actual net income. Yo, Fern Mac, what's up, brother? He said opinion on OKE and MO stock. So yeah, you know what? Let's start with MO right here. Thanks dude. He gave a 199 super chat. Thanks so much to Fern on the YouTube stream with the super chat. So he said Altria. I can't talk about what industry they're in, but what I can tell you is they have a sustainable, really high dividend yield. If you're looking for a company with a high dividend yield that's actually sustainable, here's one that I recommend. Again, not financial advice. Look at this. They have a 6% dividend yield and only a 61% payout ratio. So very safe payout ratio. Here's how we can kind of tell. So they did technically have some one-time adjustments from these I don't know if it was acquisition related or lawsuit related. I don't know. But basically, it says the net income's down by 37. It's not actually. But let's not give them the benefit of the doubt here. They really made around $3 billion of net income. But let's say they just made $2.4 billion. So they made $2.4 billion of net income. Let's go see how much the dividend cost. The dividend cost $1.72 billion. So even then, they can still easily afford the dividend. Look at this. This is the exact amount the dividend costs every quarter. They even have so much leftover money. They're doing share buybacks. They spent $300 million this quarter on buybacks. They're spending like $300 million every quarter on buybacks. So they're just a very shareholder-friendly company, returning all the money to the shareholder. So yeah, you own like 2% more of the company, 6% dividend. You have like an 8% total shareholder return there. Pretty cool company. And they've been doing really good. So, and OKE stock. Let's do OKE. Wait, someone said, Gregory said, what app is this? Yeah, hey, by the way, this is a brokerage I'm on right here where you buy stocks and analyze them. If you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the very first link there. It's also an affiliate link, so we'll both get 5 free stocks if you sign up and deposit $100. But anyway, here's OKE stock. I believe this is an oil and gas play, let me double check. I don't remember. So yeah, natural gas. Refine. Let's see how the natural gas products business is doing. So it's up 9% year over year. Nice. And hey, Hill Dorset, thanks for the dinosaur, man. I appreciate you. And what up, John? Hope you're doing good, brother. So what's the news? Jerome Powell saved us. There's now a 90% chance of an interest rate cut in September. So that's why the market's rallying. The interest rates are going to get cut basically next month, almost for sure now. But here's the net income on this company. Wow, they're printing money. I mean, OKE, if you want exposure to natural gas, this is one of the better plays, I think. Wow, revenue's up 61 after being up 31. So revenue's up 61. In this net income, they're making nearly $1 billion, around $800 million in net income every quarter. So pretty cool company. And look at that. You get a 5.4% dividend yield that's sustainable. So yeah, there's your natural gas company. If I invested at Apple, will I get cash back? You do. Apple does pay a small dividend, very small dividend. So Daily Draft said SoFi stock. Yo, dude, SoFi is up 6.4% on the day. I do own them. I regret every share I've ever sold to this company, but this company deserves to be at a new 52-week high today. They're so growthy, man. I love SoFi, and another great just never sell kind of company. People are really starting to take them serious. Check this out. Look at their financial services business specifically. It is up 105% year over year. That's an incredible growth rate. I mean, look at that. Sales are at a new record. They've doubled right over around here. Same with the lending business. With the student loan forgiveness cancellation stuff, their lending business is starting to blow up again. And let's see. Yeah, it's up 30% year over year. So lending's up 30. Fintech revenue's up 105. So on average, their total revenue is up 42. And check this out. People are really taking them serious. They made $100 million of net income this quarter. They're now making net income every quarter. So SoFi is just great, man. Perfect never sell stock. Hill said Energy Transfer. So this, by the way, is an MLP. So this is it's technically not even a stock. You're buying units of this company. So if you buy this stock, it's unlike any other company. You will get a K-1 tax form, which is notoriously hard to fill out. I accidentally bought one, cost me $200 with that account. So first off, stay away from this stock if you don't want a complicated tax form that no other stock gives you. But because they're an MLP, they're a master limited partnership. You're technically a partner in the company, not a shareholder. That's why you get a K1. They have a crazy yield and it is sustainable. So check this out. You get a 7.4% dividend yield with this company. So yeah, they're a pipeline company. And yeah, they're printing money, like 1.5 bill of net income a quarter. But I stay away from the MLPs just because you get the K1 tax form. So let's see here. What's your P&L today? Well, in this portfolio, we're up 2.95%. We're actually all-time high in this portfolio today. This account, we are up 2.98%. We're up 18% all-time in there. And then we have our Robinhood portfolio, which is our dividend growth account. We're up 2.4% on the day in here. And how are we doing year to date? We're up 13.5% year to date, pretty close to an all-time high. Oh yeah, and then we have our Roth IRA. We have a small Roth IRA. It's $1,800, but I decided to buy one share of Microsoft yesterday. I'm only green 0.05% on it. So why is Powell's stock free cash flow down? Oh yeah, hey JVM, that's because the free cash flow number, you don't got to worry about that on Powell Industries. You mainly want to focus on the net income. They basically had a bunch of if you go back to right here, on the free cash flow number, they had a bunch of orders. I don't really want to explain it right now because that's boring. Let's see. What is URI? They had basically a bunch of orders come in beforehand that they got paid up front for. So what is United Rentals? Yeah, this is one of my favorite dividend growth stocks of all time. I mean, actually, if you go to my most recent YouTube video, so yeah, here's URI stock. If you go to my most recent YouTube video, the whole video is an analysis on United Rentals stock. The whole video. So if you go to my YouTube channel, if you type into YouTube Nathan Robert, that's my YouTube channel. I'm also streaming on there as well. It's also in the link tree in my bio. But yeah, I love that company. Best dividend growth stock of all time. So anyway, what up, Ravi? He says Hims and Hers a good time to buy on the reversal. Let's check it out. So hey, yeah, thanks for showing up. And what up, JVM? I'll hopefully I want to. If you got any other stocks for me, let me know, JVM. So here's Hims and Hers. I do want to answer that question, but. Here's what's so growthy about this stock right here, and this is what I like about them. Look, the revenue's up 72% year over year. So that's what I love about this stock has been the growth of the business. But one thing you do got to be aware of is that they can no longer sell a weight loss prescription. They used to sell Ozempic, but then out of nowhere, Ozempic ended the partnership with him. So now this company can no longer sell a weight loss prescription, and the weight loss prescription was leading to a lot of their growth. So the future growth is going to go down a little bit, but that's kind of priced in already. For right now, the business is doing great. They're printing net income. I mean, they also, for wondering what happened with these balance sheet shenanigans, basically they issued $1 billion of debt to raise $1 billion of cash. So the assets went up with the liabilities, no big deal there. So that's how their cash went from 300 mil to 1.2 billion. So yeah, anyway, I do like this company. I wouldn't have it as a huge meaningful position though. I want to have it as kind of like a fun position, and I have a lot of those like SoFi and Robinhood and PSIX. They're kind of fun positions where you just put something that's not too meaningful for you. You just buy a couple of shares, you just maybe $100 or $200 in it, not much. You don't want to have like half your portfolio in there. So let's see. What up, Graco? Yeah, Microsoft is good. Yeah, Supreme. Yeah, I agree. Microsoft is a great never sell stock. What up, Mushy? Hey, thanks for showing up to the YouTube stream. How's your portfolio, brother? Yeah, John, portfolio is doing great today. Let's see, ASTS Space Mobile. So yeah, hey, if you're looking for a space stock, this one is all right. I really prefer a Rocket Lab over this company, and here's why. If we look at this one's financials, they don't really have much revenue. I mean, the revenue was $1 million this quarter. What's the market cap on this company? A $16 billion company for a business that's doing $1 million of sales a quarter and loses a boatload of money. They lost 130 mil this quarter, 60 mil last quarter, 50 mil. So they're losing a bunch of net income. The sales are nothing. But I will say, look at the projections of the growth. So look at this. They only did $1 million of sales this quarter, but next quarter, it's expected to be 25 million. Then the quarter after that, 32 million. So what I'm kind of saying with ASTS Space Mobile is these next 2 quarters are crucial for them. So the next 6 months for this stock are going to be like the most volatile ever because they really recognize a lot of their contract revenues. So anyway, I'd be careful with that one. Hey, Invested 09, thanks so much for the dinosaur there. Yeah, let's do PSIX stock. I do own this one, by the way. I might be biased. I decided at the time I bought the stock on a day where it was at an all-time high over here, and then just continued to keep hitting new all-time highs. Here's what I love about this company. If you look at the market cap, they're a $2 billion company. So the whole entire company's worth $2 billion. They're not that big, and they're trading at 18 times PE. If you look at the industry averages of 31, so they're trading at 18 times net income. Look at this net income number. It's really strong. Look at that. Wow. So first off, revenue's up by 73. Incredible growth. So revenue's up 73. Net income's up 137. So they're growing their net margins. Wow, 26% net margin. They're making net income every quarter, deleveraging the balance sheet like crazy. We're from 91 to 69. That's nuts. So anyway, I'm just holding that company for the long run as a little another fun position. Here, I'll show you my position actually. Yeah, there it is in the middle. I got 5 shares of PSIX Power Solutions. I love this company. Hey, no way. Invested 09 for the hat, dude. I really appreciate you, brother. Thanks so much. Wait, SoFi is for fun. Majority of the new poor. Hey, yeah, well, SoFi, actually, they're a bit more. I can trust them a lot more than some of these other stocks. But I probably wouldn't want more than like 10% of my portfolio in like a SoFi, as much as I love them. So someone said Dutch Bros. Yeah, or Kiara, how's it going? Let's check out Dutch Bros right here. This is like a Starbucks competitor. I've been to one time before in Arizona. They're not where I live, but they triple beat on every metric right here. So they have their company operated shops. That's 91% of the revenue. And look at that. For a restaurant in this environment, that's really good. Up 30% year over year. How's the franchise revenue doing? Franchise revenue is up 20% year over year. That's the high margin royalty fees they make from the franchises. And also look at this net income they're making. So revenue's up 27, net income's up 73. So they're growing their net margins, making net income every quarter. Wow, they're making more than Shake Shack now. That's interesting. So hey, it's kind of a good business to be in right now. They sell like drinks and stuff, and those are high margin. Today was the first time I saw the market go crazy. Yeah, dude, the Powell. So basically, there's a 90% chance that interest rates are going to get cut next month. So someone said, Jojo said Baba and ABAT. Well, here, let's look at Baba right here. I got you. Which one is this? Oh, I forgot what stock we were looking at there, Eddie. By the way, if you missed anything on the stream, I'm also streaming on YouTube, so you can replay it on the YouTube stream. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Hey, thanks for the follow. I appreciate that. Yeah, if y'all want to hit the follow button, we go live every day, sometimes twice a day. I sell nothing. I have no course book. The only thing I do have is a YouTube channel. So best way to support me, just subscribe to my YouTube channel. It's called Nathan Robert. Link tree in bio. I'm trying to build out my YouTube channel. I don't get much viewers. I'm also streaming on there. But anyway, here's Alibaba. This is the Chinese Amazon, basically. And check this out. They're making a lot of net income right now. $2 billion this quarter, $6 billion last quarter, $6 billion the quarter before. So they're making a bunch of net income right now. And because of this, they're now returning some of that to you as a shareholder via dividends. You now get paid $1 a year. They have a very low payout ratio, a near 1% dividend yield. They are Chinese, so they're just like, have this low PE ratio inherently, but basically Chinese Amazon, it's AliExpress, or they're more business to business more than business to customer, but because a lot of businesses buy a bunch of stuff in bulk from AliExpress and then sell it. So anyway, hey, thanks for subscribing to the YouTube. I really appreciate that. So let's see. What about Palantir? Would you say it's still expensive? I would say Palantir is still expensive for me to put money into. And just because it's expensive, it doesn't always mean it's not a buy. It could always get more expensive. But for me to put a meaningful amount of money and kind of trust it, I just can't. But here's why, honestly, Palantir deserves a high valuation. They're so impressive. Like, check this out. 55% of the revenue comes from the government, and the government revenue is up 50% year over year to a new record. Police stations use the government or Palantir software. The commercial revenue with like Google and other S&P 500 companies, mom and pop shops, that's up 50% year over year as well. They had their first ever $1 billion quarter, up 48%, great growth, 48% revenue growth, 140% net income growth. So they had 33% net margin. They have no debt at all. Like it takes so much risk off the table when they're just so great like this. But the high valuation is just the one thing keeping me out of Palantir. I'd love to get exposure to that stock, but the valuation is still a little too high for me. Baba helped me turn $60 into $500 with options. Hey, nice, dude. I'm not too good with options. I actually don't have any options right now, but I love to hear that. I want to give a quick portfolio update for all the new folks here. So yeah, we're up 2.4% on the day. Jerome Powell saved us today, basically guaranteeing a rate cut next month. So now there's a 90% chance of a rate cut in September. So markets are super green. My Roth IRA is up 1.7, Main's up 2.4. And in here, we're up 3% on the day. Comfort Systems, Powell Industries, really leading the gains today. So Anyway, let's keep going. Subscribe on YouTube. Yo, Invested09, thanks so much. Yeah, I'm trying to build out my YouTube channel. Jack FX, what's up, man? So let's see. Was on a call. Did you go over PRIM? I did not. Let's check out PRIM stock. Let's see. What up, The Road? She said, can we look at TOUR? Yeah, remind me. Let's look at TOUR. Looking good. Yeah. Hey, what up, Andy? So let's see. PRIM stock, they're at an all-time high today. So, yo, congrats if you own this stock. Congrats if you're in basically any stock today because the market's on fire. But let's see. So they're an energy utility company. So where's the revenue come from? 95% comes from the US. Let's see. So here's why they're doing so great. They're beating analyst expectations like crazy. And yo, Zio, thanks again for the rose a while back. And you're up 3.3% on the day. That's incredible, dude. That's way more than the market. So check this out. Look at this huge beat on the analyst expectations. The analysts expected 1.68 bill. They reported 1.9 bill. Look at this huge net income beat. Analysts were expecting 95 cents. They reported $1.50. Huge triple beat on every metric. I mean, that's incredible in net income growth. Net income's up 70. Revenue's only up 20, so they're growing their margins like crazy. So anyway, I can see why they're at all-time highs. They're crushing it. You look at CEG. Yeah, let's go look at Constellation Energy. If you're wondering what this company is, they're only up 0.3% of the day. They're actually not doing too great. Somewhat, this company benefits from inflation, but it doesn't need that for part of its story. Anyway, basically, this is the largest nuclear energy play. They own the most nuclear reactors out of any other publicly traded stock, like 50% of all the U.S. nuclear reactors. This company, they spun off from Exelon just about 3-4 years ago, and they've just been a great performer. So anyway, I do own this one. I might be biased, but that's your main nuclear reactor play. My favorite nuclear play. I looked at all the nuclear stocks. I've done my research. I've looked at Oklo, Vistra, NextEra Energy, Southern Company. I've looked at every single nuclear company. There's not even one close to how great Constellation Energy is. Today's a good day. I agree, DC Flips. Today's a great day, especially if you're in stocks. Yeah, happy Friday. Yeah, and it's a Friday. Let's go. So let's see. Fern Mac, he said Taiwan Semi. That's a great combo there. So Oracle. Yeah, let's look at TSM real quick. So you know what? That's a great. I would happily own all those companies. Great. Hey, what up, David? How's it going? So here is Taiwan Semi right here. This stock is doing great, and I feel like they're going to continue to win. Like, look at this right here. Even though the stock is pretty close to all-time highs, here's why I think they could easily go higher. It's because the multiple is only at 25 right now. The industry average is a 46, of course, probably just from, and yeah, they're the third largest play out there. You know, largest is Nvidia, then Broadcom. But anyway, low valuation, I feel like it could stretch up to like a 28. Huge market share, growing market share. Market share of their 5nm wafer chips went from 61 to 67. Their chips are in everything, like your car window, your washing machine. And look at this growth right here. So revenue's up 55. First off, incredible growth. Revenue's up 55. Net income's up 79. They're making over 10 billion of net income every quarter. It was 14 bill this quarter. This is a $1 trillion company with 42% net margins with a 1.25% dividend yield. Taiwan Semi is like a great, just never sell stock. What app is this? Yeah, hey, Alexi. Hey, this is a brokerage right here where you buy stocks and stuff. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. And it's an affiliate link too. Or you can just go into Google and type in Moomoo, just a brokerage. But anyway, let's keep going here. It's an affiliate link too, so we'll both get 5 free stocks if you sign up. Deposit $100, full transparency. Dividend coming up on the 5th. They will pop before that. Hey, nice. Let's see. For co-consolidated, what is the elimination like under their? They have, elimination. That's just some accounting stuff. Don't worry about that. Like losses on investments. They have this trucking business as well, John. It's no big deal. Do you think they will be heavily regulated if new president comes in and doesn't want nuclear? Yeah, that is true. But I think right now, with all the executive orders that have been signed, everyone loves nuclear right now. There's recent news, like they're ending credits for solar and wind. They hate wind. But nuclear is one I'm really bullish on. I love that one. But that's definitely a risk. Taiwan Semi raising prices on the 2nm wafer chips to $32,000 each. Really? That's interesting, Tyler. MSCI World. Wait, are you talking about MSCI stock? Let me know if you want me to look at that one. Ooh, so here's ARM stock. You know, I didn't know this, but if we go to Nvidia's portfolio right here, did you know Nvidia actually owns a bunch of ARM stocks? So ARM makes like the energy efficient chips, and most of the revenue comes from like royalties, which is pretty cool. So they have crazy margins. let me see this right here. So yeah, they're making net income every quarter. The net income did fall 41%, but I don't know. Anyway, I do wonder what happened there, but yeah, 97% gross margins. I mean, I can't believe that's higher than Reddit's gross margin. But anyway, if you're wondering where does ARM's revenue come from, I think it used to break it down. Let me see if it'll do it. If I go here, so yeah, look at that. 60% of the revenue comes from royalty revenue, the people using their like coding language, whatever it's, and then they have the license revenue. Basically, super high margin business, great company. All right, so IONQ thoughts. And Amazon does own some of this company. I believe Amazon owns like 60 million of this stock right here. Oh, let's see. What is this right here? IONQ expands quantum IP portfolio, surpassing 1,000 patents and applications. So, hey, check that out. This company might have some real IP and patents that maybe Amazon sees or something. So for right now, they are pretty ridiculously overvalued. $11 billion company, and the sales aren't much. At least it did grow to 20 mil this quarter. That is great news. But luckily, they have a fortress of a balance sheet. They've been able to issue a bunch of shares, raise cash. They are debt free. Let's see, yeah, 550 mil of cash on hand, so pretty ridiculous. But it's tough paying a 16 bill valuation for right now. But yeah, that's a huge quantum momentum play. So let's see, 94% of Nvidia's portfolio is in CoreWeave. Yeah, exactly. It should break that down for this. Let's see, yeah, 85% of their portfolio is in CoreWeave, 5% ARM, APLD's 5, Nebius 3, and some of the riskier stocks. But let's see. Can you look at Intuit? Yeah, let's do Intuit right here. So INTU. So this is the company that helps you with your taxes and stuff. Dang, they're down 4% of the day, and the market's really green today. Oh, they reported earnings. Okay. So let's see here. What did they do? So they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat. But yeah, so this is the quarter that's really meaningful because it's every Q3 of the year. So when they make all their net income for the year. So they made 2.82 bill in net income, up from 2.4 bill. They own, Global Business Solutions, Credit Karma. So yeah, basically they help businesses and people out with their taxes. And yeah, I wonder why they're falling so much. What's your highest percent rise on investment? How did you come to buy the stock? Yo, what up, Eyes? So it'd probably be Robinhood, man. My highest percent gain on the stock is Robinhood. We're up 690% on Robinhood. So they've been an absolute monster of a performer. But I just bought them because I wanted exposure to Bitcoin, but I didn't want to buy Bitcoin exactly. So I bought Robinhood and yeah. Hood, they added. So you're right, Adrian. Yeah, dude. Speaking of Robinhood, and hey, I have a Robinhood portfolio. So I'm a shareholder and a customer. So anyway, here's what I love about Robinhood, man. They're so innovative. You see their net cumulative funded accounts, 26.5 million funded accounts. They're making a lot of money from their Robinhood Gold subscription right now. But look at the growth. And the margins and the growth of this company are the best. So look, revenue is up 45% year over year. But net income, or look at the exact revenue. The revenue was 989 mil of revenue, and out of that, 390 million of it was net income. They have ridiculous 40% net margins in the most recent quarter. So anyway, Robinhood, I love that company. They deserve to be doing this good. I regret every share I've ever sold on them. All right, let's see. Bro stock? Are you talking about Dutch Bros, or is there a stock called BRO? Brown and Brown, I think, is this like an insurance or asset manager company? Let me see what they do. So retail programs. Oh yeah, wholesale brokerage. Well, let's go look at the profits here. Are they growing? So revenue's up 9, but the net income did fall year over year. So margins fell, but still they're making like 300 million basically 300 mil of net income a quarter, 0.6% yield, very low dividend payout ratio. What's the PE? The PE, the price of net income, is a 27. Okay. Yeah, not too bad. Yeah, happy Friday, Jesse. Happy Friday. It's a great Friday. Jerome Powell saved us. So let's look at Roblox stock right here. Yeah, then we can look at the Roach. We'll look at TOUR, COHR. Remind me to look at these. So if we go to Kathy Wood's portfolio right here, 5.5% of her portfolio is in Roblox stock. And here's one of the reasons why they have been doing so good lately. Look at this is a cool stat we get here. This is their daily active users. And check this out 2024 Q4, there were 79 million daily active users. Now there's 111 million daily active users. That is a huge increase. But one thing that is still you got to be careful with is the fact that they're losing a boatload of money right now. Look at that. They're losing 200 to 300 million in net income a quarter. That's mainly thanks to their stock-based comp. That's why the free cash flow is so positive, but net income negative. They're literally paying their employees over 300 million worth of stock a quarter, and that's included in GAAP net income. So they are a bit leveraged as well, but they've just been beating all analyst expectations, growing more than anyone thought. So let's see, TOUR stock. Are your accounts brokerage account or IRA? So yeah, all the accounts I have are main taxable accounts, and then here's my one Roth IRA. I have a $1,800 Roth IRA, not much, but yeah, here it is. So, but yeah, all my other ones are taxable. So someone said TOUR stock. What up, man? So we don't really cover these kind of stocks. If you look in the top right, you see market cap. That's how much the whole company is worth. So this company's only worth $99 million, and they're at an all-time low right now. So it's a tough buy. Well, let's see. Are they making money at least? So revenue's up 15. They did make net income this quarter, so that's actually good news. Huh. It's not that JD.com owns a lot of that. Wait, where do the sales come from? Oh, this is a Chinese company. So first off, okay, all of their sales come from China. So because of that, I would stay away. But the business was looking decent before that. But anyway, love the live. Hey, thanks, Joey, for the follow. I appreciate that. Yeah, also watch out for people impersonating me. I sell nothing. I have no course, no book. Only thing I do have is a YouTube channel. Best way to support me, subscribe to the YouTube channel. I'm trying to build up the follower there. YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But here's COHR stock, Coherent, $14 billion company. Let's go do some analysis on them. I like them. So they're in networking, materials, and lasers. How's the lasers business doing? Down 1% year over year. Networking, wow, look at the networking business. It's up 39% year over year to nearly $1 billion. So it's like that segment of business is like leading to a lot of their growth. So it says they lost 100 million of net income this quarter. They technically didn't. So that was a one-time adjustment, some GAAP adjustment, maybe some non-cash item. I don't know, but the business really made over 100 mil of net income. Great balance sheet. So, I like that one. I can see why they're doing so good. So let's see. You ever trade BCT? I have owned Bitcoin a lot in the past. I don't own any Bitcoin right now though. What up? He said QXO stock. Yeah, hey, let's check out QXO. So, this one's on my watch list right here. So I believe this is like a home builder stock. They're in like the roofing industry or insulation. Let's see. So yeah, residential roofing products. So yeah, this is a roofing company. I prefer Carlisle Group, but yeah, complementary building products. Let's just see how the business is doing down here. So yeah, they have like some weird like way they report their earnings. So it is going to be a little bit difficult for me to really analyze this. Like, look, it says revenue was 13 mil. Now it's 1.9 bill. I don't know, man. It's a little complicated for me to understand these financials because they look really weird. So there was something that happened with them. I forget. But anyway, wish I'd give you more thoughts on them. Let's see here. NLR. Yeah, let's do this one. NLR stock. So this is the Van Eck Uranium and Nuclear ETF. And look at this. There's some little technical analysis here. They're saying there's a double top on the stock, or on the ETF. But anyway, they've done insanely good since 2019. Let's go look at their top holdings. So, hey, I love this ETF already. Its top holding is Constellation Energy. And then Cameco. Cameco is the best uranium play. Its top two holdings, big approval of, than some of these other companies. But yeah, I like its top two holdings. Those are good ones. Great picks. What stocks do you recommend? I just recommend buying great quality companies that you probably like buy stuff that and always do your own research on them. Like, here's the stocks I own, like Meta, Google, McDonald's, Amazon, Disney, Reddit, SoFi, just companies I believe in that have good financials. Progressive Corp, the insurance company. So Robinhood. So yeah, anyway, I wanted to look at Meta though. So I do own this company. Yeah, I absolutely love this company. Meta just signed a $10 billion cloud deal with Google. And yeah, so here we are. We are up 1.8% on the day thanks to Meta. And this is a great company, man. Another one you just want to buy and never sell. So here they are. They are trading at a 27 PE. So here's the thing. I believe this company just has the ability to go up a lot more. A 27 PE for Meta, a Mag 7 company. Look at their active users. This is crazy. It's almost hard to believe. Who knows if it's real, but but they have 3.48 billion daily active users. So first off, Meta and their apps aren't available in China. And they're saying they have 3.5 billion daily active users. I'm a shareholder, so I'm not going to question it too much, but seems a little hard to believe. But anyway, like half the world is on one of their apps a day. But look at this right here. Here's what's so incredible. So the revenue on Meta is up 21%, but the net income is up 36%. So another company growing their net margins. It's a $2 trillion company with 40% net margins. It's incredible. And they do dividends. They do share buybacks. They're investing so much in the future based off these cash from investing activity numbers. Although there's Mark Zuck, he owns 14% of all the shares. So yeah, anyway, Meta also has a dividend, 0.3% yield, but only an 8% payout ratio. Meta's just great, man. So I'm conflicted in buying AZN and EVR stock as undervalued quality stocks. What do you think? What is AZN? So I haven't heard of this one actually. AstraZeneca, so a huge name, a $250 billion company. So let's see here. They're in the pharmaceuticals industry. Look at that. Their annual revenue just hits a new record every year. So that's great news. Let's check out the profits here. So yeah, look at this. Great news. So revenue's up 11, net income's up 26. Another company with real pricing power, growing their net margins, 17% net margin. They're look at that net income growth of 26%. So yeah, great numbers on this company. I can see why they're doing so good. They're investing in the future. So yeah, there's a pharmaceutical play. So let's see. What portfolio are you putting the most money into right now since we're at all-time high? Basically this one, because I'm keeping a lot of cash right now. Like I have $900 of cash. It's tough buying anything right now, but I'm also trying to deposit more to my Roth IRA. I deposited like already a couple hundred this week into my Roth IRA. That way I could buy a share of Microsoft. So yeah, I bought one share of Microsoft yesterday, by the way. So yeah. Let's see. Do you think Nvidia is overpriced? Wish I bought Meta when the movie The Social Network came out. Oh, that was a great movie. Yeah, man, the stock's probably up like 10x. So let's see here. Do you think Nvidia is overpriced? Yeah, let's look at Nvidia right here. So Nvidia, you know, they're not exactly cheap, but they're probably not too overvalued. There's a lot of tailwinds for this company. They're able to ship their chips to China again. Nvidia has a huge market share. We all know them. They have a 20% PC GPU market share, huge market share. And look at the automotive business. Lucid autonomous cars now use Nvidia's automotive software for the autonomy driving. Most of the revenue comes from data centers. Data centers need GPUs, and Nvidia makes their own GPUs. And it's genius for them to get into that business. So also look at this right here. The crazy growth. This is why people love Nvidia. The revenue's up 70% year over year. And look at this net income. I mean, they're making like 20 billion of net income every quarter, and it's expected to keep on growing. So anyway, Nvidia, I really like them. Fortress of a balance sheet, monster free cash flow numbers. So yeah, Jensen Huang owns a 3.5% of a $4.3 trillion company. Crazy. So yeah. PDD is rocking. I guess there's 7 million of So yeah, this is Pinduoduo. This is a Chinese company, and you've probably heard of them before. If you've heard of Temu, they own them. So yeah, this is the stock right here that owns Temu, and they are a Chinese company. And check this out. Here's kind of cool. They have active users of 750 million monthly active users. Pretty cool. And look at these net income numbers. This is in Chinese. So let's switch the revenue to USD. But yeah, they made $2 billion of net income this quarter. It fell after like a really good quarter, so it's kind of tough to compare it to this quarter. But the net income from the previous year was up 228%. So it's like the growth is starting to normalize. I know they stopped the tariffs are affecting Temu and stuff, but yeah, wow. Revenue after going 120% grew another 10. I mean, anyway, that's basically just Chinese, kind of like Amazon again. So, what's this one? EEIQ, please. Let's see. EEIQ, please. What's this one? Epic Quest Education. So, yeah, we don't really cover these kind of stocks. This is a $22 million company. So, this stock is at an all-time low. Foreign language education. If I wanted education exposure, I'd go with the Duolingo. Man, does anyone see Duolingo? They're an incredible company. So anyway, I'd be super careful with that one. Very, very small. Do I live in America? I do. Do I do options? Not really. I mainly just like to buy and hold just great high quality companies for the long run. So yeah. Let's see. SRPT. Unfortunately, this company made someone go unalive. I don't know if I can say the exact word, but if you're wondering, like, why has this stock collapsed? Well, basically, 2 people took their prescription and got unalived. Very sad, very unfortunate. So basically, they got I think it was this one right here, the Elevidize, whatever this prescription's called, did some damage, and that's why the stock has been struggling so much. So that's one thing I would be careful about. Basically, the sales are going to collapse in the future because they're basically no longer going to be able to sell that unless they fix it, but I don't know. So yeah. Why don't you sell calls? Hey, I'm not opposed to selling calls. I just don't think in my position I should be selling calls at this young. And I love selling calls, but I don't have any stock that I have 100 shares of, so I couldn't sell calls. So let's see. Cheetah said ROMJ. Is this another micro cap? I hope not. So this is a Canadian company, $39 million Canadian company that's not available to trade on this exchange. Oh, they're in that industry. Uh-oh. So they're in the leaf industry. I can't. Nathan is in the Philippines. They can sell it. FDA walked it back. Oh, okay, SAG. I also own a small Chinese tech firm. What's the ticker symbol for that one? JFIN. Yo, I own FUTU stock. It's a Chinese company. $750 million market cap. Let's see. $750 million company. They are Chinese. So again, we'll convert the revenue to US dollars. Revenue from loan facilitation. So it looks like they're a loan originator provider. So they're, of course, all the revenue comes from China. Let's check out the profits though. So yeah, look at that. They're making a lot of money. So that's great news. 72 mil this quarter. It's growing at a faster pace than the revenue. Look at that. Revenue's up 30. Net income's up 130. So margins are up 70% year over year. Great. I can see why they're doing so good recently. How do I make the background black on Moomoo? Yeah, hey, you just go into the settings and I have a video on my YouTube channel on how to do that, I believe, on how to use the whole app. Yeah. Let's see. Yeah, that's why I don't. Yeah, it's tough to have 100 shares because it'd be such a meaningful position. Yeah, it's all good. Cheatin, no problem. Let's see here. What stocks you want to look up? Thomas said Palantir. We kind of just looked at Palantir. We'll look at it. Nah. Or should we look at it? I guess we'll look at Palantir. Any stocks you buying right now? I'm not. I bought a share of Microsoft yesterday, but it wasn't exactly a steal of a deal to buy Microsoft yesterday. But not really. I haven't really been buying much. I've kind of just been building up my cash pile. So here, actually, I will show you another stock I've been buying after this. But here's Palantir. Again, crazy growth from the government business. Government revenues up 50%. Commercial revenues up 46%. It was just a record quarter. Both businesses are growing like crazy. They have a fortress of a balance sheet. They have no debt at all. They made record net income quarter, record margin quarter, 33% net margins. So crazy. So yeah, what is this one? TARS. What's this one? TARS. Open door. Also, what's going on? What do you think of the Powell speech this morning? Yeah, hey, Brian. Yeah, the Powell speech was great this morning. Basically confirmed a rate cut in September. So now the market's pricing in a 90% chance of a rate cut next month. Great news for the market. Yeah, we can look at Open Door too. And Open Door really benefits from an interest rate cut. So anyway, here's Taurus Pharmaceuticals. So they're therapeutics. Do they have sales? Let's hope. Yeah, they do. They have really good sales. Hold on. Let's see. So yeah, the sales have exploded. It's up to 100 million this quarter. But on the 100 mil, they did lose some money. So they lost 20 mil. They're losing like 100 million a year, but The losses are narrowing. It's headed in the right direction. The sales growth is ridiculous. So this is the best part, just how growthy they are. They have a really good balance sheet as well. So actually, as long as these losses continue to narrow, they're in a really good spot. I see why they're doing so good. Oh, and here's the stock I've been kind of buying the dip on. You can see, I recommend if you want to buy stock, you should DCA, dollar cost average. That's where you slowly buy into the stock instead of spending all your money at once. But hey, I've been talking about this one for a while. If anyone's been on my streams recently, I've always been talking about Coca-Cola Consolidated, and it's had a pretty monster past 5 days here. Really good rally. So yeah, we're now up 9% or 8% on them. Sorry. So let's go look at Open Door. Oh yeah, let me look at Visa, MasterCard. So yeah, basically, here's what I was talking about when I was saying Open Door benefits from a low interest rate environment. They're up 19% on the day. Geez. So, they like sell houses with an open door so anyone can like view them. But look at what happened when there was a low interest rate environment or zero rates, in 2022. They were printing money. I mean, crazy growth. I mean, $5 billion that quarter, $4 billion. But I don't know. It's colossal. So we're basically just waiting for a lower interest rate environment for the growth to come back to that company. The losses are narrowing too with them, but I don't love that company. I'm being really careful with them. So what do you think of Visa, MasterCard? Yeah, let's pull up the chart of Visa. So oh hey, look at that. This app is telling me that there is a what is this? A bullish continuation wedge, and the rise probability is at 94%. Well, that's technical analysis. As y'all know, I like looking at the fundamentals, the actual financials, and here's what I love about Visa. So it's just the net income they're making. They're literally making, look at that, call it $5 billion of after-tax net income a quarter. So what is Visa doing with $5 billion of net income a quarter? Well, here's why I love them. They're spending literally, if you look at the top there, $4 to $5 billion every quarter solely buying back their own stock. And here's what that does for you as a shareholder. It gives you more ownership in the company. And check this out. Look at their net income. Net income is up 8.2, but the net income per share is up by 12% because the share part of the ratio went down. There's now way less shares, same amount of net income. So the EPS, your value as a shareholder, goes up a lot more. What do you go into the news feed to stay informed on top of the markets? Yeah, I kind of just look at the Webull and the Moomoo news feed. There's like a news feed on here as well, which is pretty cool. That shows like the exact stuff. I wonder if I can, I remember how to do that. Markets. Oh no, it's not in this tab. Oh yeah, news right here. Yeah, I'm slow. So yeah, here's you click the news tab and it just shows all the recent headlines. So yeah, Powell highlights job opening to cut rates. Yeah. Anyway, let's see here. Let's go back. Oh yeah, PanW. So here's another cool feature. We can look at some of these super investors' portfolios like Nancy Pelosi. And the stock we're about to go over is owned by Nancy Pelosi. As you know, these super investors by SEC law, have to make all their trades public. And, it's kind of cool. We can like follow them into the trade if we ever wanted to. But one of the stock Nancy Pelosi owns is a huge cybersecurity company, PANW, Palo Alto Networks, probably my favorite cybersecurity stock out there. And they're also a huge subscription model company. I love subscription model companies. Check this out. 53% of their business comes from the subscription business, and it just hits a new record literally every single year, every single quarter. I mean, look at these year-over-year growth rates in the middle. I mean, it's super impressive. They're just so growthy. Hey, what up, German? Yesterday's market erased 40K from my portfolio, but today's, yeah, you're about to make all that up plus more, German. The markets are going crazy today. So, yeah, and also they're printing money. I mean, if we look at the free cash flow, this company's making 500 mil of free cash flow plus a quarter, a couple hundred mil of net income a quarter. They had some little one-time adjustments to the net income. It says it's down 30%, but they actually had a record quarter of operating profits. So anyway, PanW is a great cybersecurity stock that you should just buy and never sell. What's the app? Yeah, hey, Gab. This is actually a brokerage right here where you buy stocks and stuff. If you want to get this little software I'm on, it's my favorite app, lowest fee brokerage, best free, useful features. It's in the link tree in my bio, the very first link there. Or you can just go on Google and type in Moomoo, it's just a brokerage. But also, if you sign up with my link there, we'll both get 5 free stocks. It's an affiliate link. So I'd appreciate that. Full transparency, it is an affiliate link. Anyway, let's keep going here. Can you look at Tencent? Yeah, let's look at Tencent right here. That's actually a Chinese, probably my favorite Chinese stock of all time. So if you're wondering, wait, Tencent. Okay, there we go. TCEHY. So you have to buy an ADR for it. So there we go. So if you're wondering, this company, if this wasn't a U.S. company, this would be a Mag 7 stock. So if you're wondering, what is Tencent? What do they own? They're a huge gaming company. Plus they own like a bunch of other businesses, like stakes in a bunch of businesses. But anyway, they own Riot Games, which is League of Legends, Valorant. So they own Riot Games and all those games. They also own Supercell. So they own Clash of Clans, Clash Royale, all the Supercell games. They own PUBG, which is like a battle royale game, and they own 50% of Fortnite. So they own 50% of Fortnite. I mean, they're just a huge conglomerate. I mean, if we look at this in USD, they're making 8 billion of net income every quarter. I mean, this is just such a great stock. Get a 0.8% yield. They raise their dividend every year, 15% payout ratio. So they're just a great company. I have a lot of tech, financials, and consumer discretionary stocks in my portfolio. What sector do you think is a good add today? Cybersecurity is an industry that is definitely needed. Maybe some defensive names like utilities. I don't know, maybe energy, tech, and consumer discretionary. Maybe healthcare. Maybe get some actual good healthcare names like an HCA stock. They buy back 8% of the shares a year. Ridiculous. There's another healthcare stock I love. I just bought one share of this company actually. UNM. And I'll show you that in my Roth IRA. This is actually. Let me go over this stock. I think this one will interest everyone here, and then we'll go back to y'all's stocks. But here's a stock. I bought one share of this company, but I plan to add more of UNM stock. If you're wondering what is this company, this is an insurance or a disability insurance company. And check this out. Here's what I love about them. I mean, they just print money. I mean, if we look at the net income, they're making a couple $100 million net income. If you average it out here, it's roughly $300 to $400 million in net income a quarter. So what is UNM doing with $400 million a quarter? They're literally buying back their own stock like crazy. And they have I forgot to show you the dividend. The dividend only costs $73 million. Since they have so much leftover money, they're doing share buybacks. Look, the dividend is a 2.5% yield, and the payout ratio is only a 16%. That's a very low payout ratio. But here's the power of the buybacks that they're doing. So look at this. The net income fell by 13, but the EPS, the net income per share, only fell by 6. They have bought back 8% of all the shares in the past year. That's why I decided to buy some UNM stock, plus a 2.5% yield, very sustainable dividend, crazy buybacks. I just love them. Great financials. Hey, Octopus or that MRK, thanks for the rose. I really appreciate that. What platform is he using? Yeah, hey, Christian, this is again, brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. So let's check out MRK right here. Here is we got to look at Eli Lilly. I forgot to look at that one, John. That's my bad. So here's Merck. This is another healthcare play, and they're actually not doing too terrible. So yeah, look at that. 88% of the revenue comes from their pharmaceutical business. Then 10% comes from their animal healthcare services. So pretty cool. But look at this right here. Here's the one thing investors probably aren't too happy with. Like the lifeblood of the company, the sales are actually down. So they're not really growing too much. The revenue's down 1.9. Not great. The net income fell by 18, but still, look at this profits. I mean, they're making roughly 3 to 5 billion of net income every quarter. And they share half of that with the shareholders via dividends. You get a near 4% yield, sustainable yield. The PE is a 13. The PE ratio is probably so low because they're just slow growing or even negative sales growth, but still they're printing net income right now. So yeah. Here's another healthcare stock, Eli Lilly right here. I kind of predicted that this one was going to recover from this huge dip. Basically, they have this weight loss prescription called Zepbound, and they made a pill version. It's normally an injection, but they made a pill version, and the pill version basically had bad results. It didn't work, and the stock lost a couple 100 billion on that of market cap on that. I'm like, they shouldn't have fallen that much, especially when they had a record quarter. They beat on revenue by a huge chunk. They beat on net income by a huge chunk, and they beat on EBITDA by a huge chunk. It was a great triple beat quarter. Try not to spam there. Hold on. But yeah, this is an incredible net income quarter. Up 90% year over year. So they're just so growthy. They're printing money. What about the actual revenue growth of this company? I want to pull that up. Maybe the revenue doesn't want to load. Please. Sorry, my Wi-Fi is kind of bad right now. I do apologize. Oh, there we go. So revenue's up 38% year over year. So great. Yeah, hey, thanks, Josh. I appreciate that. Yeah, the market's booming right now. Yeah, congrats if you own any stocks today. Your portfolio is probably looking really green. So here, Michael said NU stock. This is a very cool company. This is NU. This is a crypto bank out of Brazil, out of South America. So check this out. If we look at where this company's revenue comes from, like I said, basically all of it, or 93% comes from Brazil. And that's where crypto is really popular. Their currency down there isn't great, so they use crypto. And so being a crypto bank down there has been the move. And check this out. The revenue grew very nicely. Revenue's up 28, net income's up 30. Look at this net income they're making. Basically 500 to 600 million of net income a quarter. And also another cool thing, Warren Buffett owns some of the stock, or well, not Warren Buffett, but remember when we were just talking about Tencent stock? Tencent owns 3% of all the shares right here. So like Tencent owns a bunch of random companies, like they own some Snapchat. Anyway. But yeah, I love that company. All right, let's see here. I'm just happy to see green grass again. Been so boring for the past couple of days. Yeah, man. The past 2 days were really, dang. TikTok just took down my live stream. Well, luckily for TikTok, I can switch accounts to my second account. So give me 1 second here. Hold on. Let me pull up my Robinhood portfolio. Yeah, that's why I appreciate y'all being here on the YouTube stream. TikTok is not too friendly with me. So anyway, don't worry. We're pulling up the second account. Yeah, and if you guys got any stocks you want me to look at in the YouTube chat, let me know. I'll for sure check out all of them as a way to say thank you. So boom, there we go. It should be up on my second account now. Let me fix this. Boom, there we go. Okay. What up for y'all? Okay. I prefer being on YouTube. Yeah, dude. Mosey, yeah, you're right, dude. TikTok is not too friendly with me. But yeah, here, I'll give you another quick portfolio update. All time in here, we're up 17%. We're up 2.74% on the day. A lot of that is led by Futu, Disney. Actually, no, that's not right. By Zoom. Zoom is finally seeing a recovery. Zoom reported earnings yesterday. They're up 10%. Even though we're still down 47%. So yeah, we zoom out. Yeah, look at that blue line. The blue line is our cost base. It says $153 a share. So this company just has to double from here, and then I should be break even. I can't find you. Hey, Fern Mac, it should be is it not in the description of the stream? Oh, I think the stream is vertical. Actually, here you go. It's right there, Fern Mac. Yeah, if you wanted to get the thing I was talking about, the Moomoo link, it's right there. The first link there. So yeah. We're thinking about McDonald's and just holding for a long time. Dude, McDonald's is a perfect buy and never sell stock right here. So yeah, here's McDonald's. I do own them, by the way, so I might be biased. I own 15 shares of McDonald's, but I actually just bought another share of them not like a week or two ago. Yeah, 302 on August 13th. So on August 13th, I bought another share of this company. Here's the thing about McDonald's. McDonald's is really a real estate royalty company that's recession resilient. So if we go into recession, like look in 2008. In 2008, when every other stock tanked, McDonald's actually was flat. It was the second best performing stock in the S&P 500. So also, if you go spend $100 at any McDonald's, $4 of that goes back to the McDonald's stock as a high margin royalty. So pretty crazy. Wow, is that a new all-time high on United Rentals? That's ridiculous. Do you know your total average year-to-date return? Well, let's check it out. I actually don't, but we're up 13 in this one. So we're up 13% year-to-date in that portfolio. We're up 47% year-to-date in this portfolio. And then year-to-date right here, we're up 29%. So probably around the 20 to 25% range. Hey, look at that. We got $107 of dividends so far year to date in this portfolio. Yeah, we get dividends from Main, Disney. I love dividend paying companies, but yeah, I love being fully transparent, by the way. If you ever got any questions for me, let me know. I feel like no other TikToker or YouTuber does this. Like I'm fully transparent. I'll show every stock that I own, how much I'm up and down on them, my winners and my losers. So yeah, JVM, we've been pretty lucky. A lot of these gains have really come from like a Comfort Systems right here. Look at this is my largest holding now. They just have an absolute great earnings report. We bought all our shares down here during the dip. Also, Amphenol Group, we're up 77% of this company. We bought most of our shares right down here. And then check this out. I actually bought another share of this one 2 days ago. Oh, did I mention that? I don't know if I did, but I bought a share, just one more share of Amphenol Group at $107 a share. They are just so growthy. They deserve to be at an all-time high. So Amphenol Group has seen a lot of demand from Nvidia. Nvidia has this new NVLink spine product that needs 2 miles of copper cables, and they're ordering that from Amphenol Group, some of it. So why do you put money on different apps? Why not keep it in one? Hi Zine. It's just there's no burden to having multiple accounts and multiple brokerages because it's just an extra sheet of paper at the end of the year, just an extra 1099 form that's already filled out. So And I have different goals with each portfolio. Like this account specifically, this is my main Robinhood account. What I do in here is I mainly just like to buy and hold dividend paying stocks. So every stock in this account pays a dividend, which is pretty cool. So yeah, let's see. That's crazy. I'm up like 15%. Yeah, hey, that's really good though. Actually, that's still beating the S&P 500. Oh, uh-oh. Uh-oh, hold on. Oh, good thing there we go. Sorry, my phone disconnected there. We are back. So anyway, what was I saying there? So yeah, if we look at the S&P 500 right now, the Qs are up 1.5% on the day. Market's doing pretty good. Someone said cool screenshot. Yeah, hey, this is all a screenshot. All right, so let's see. Ethan said, thoughts on UWMC. Let's check that one out. UWMC. Let's pull this one up. UWMC. I believe this is a mortgage company. So this company like originates mortgage loans. Yeah, look, origination, sale, and servicing of residential mortgage loans. And this is another company, kind of like Rocket Mortgage, that is begging for a low interest rate environment for people to refinance their loans. So yeah, revenue's up 21. Look at that net income. They made 300 million net income this quarter. It's really good. Anyway, they're kind of like a Rocket Mortgage. My negative $700 year to date. Dang, user. Hey, what up, Luffy? What's your fave dividend stock? Dividend stock? Probably McDonald's, man. It sounds cringy, but McDonald's is probably my favorite dividend stock of all time. Save like McDonald's is gonna be here. I trust McDonald's more than Google in the long run. Like they're just such a great business. So anyway, here's ISRG, Intuitive Surgical. This is a great medical device company that if you're looking for exposure to healthcare medical devices, this is one that I'd highly recommend. Again, not financial advice here, but look at this. Instruments and accessories are 60% of the revenue. It just grows like 20% every year, so it's up 18% year over year. But the best part about this company is the profits they're making. So first off, look at this balance sheet. They're debt-free. So this company, first off, has no debt, no debt at all, and $5.3 billion of cash. So incredible cash pile, no debt. And look at this net income they're making. It's up 25% year over year. So that means they're growing their margins. Yeah, revenue's up 21, but net income's up 25. They're making 700 million of net income a quarter. So that's great. It's detected. Someone said Neo. Oh, check out Nail. Let's look at Nail, and then we'll do Neo. So yeah, remind me to look at these. NAIL. This is the direct home builder. Oh, so this you got to be super careful with these in a downward market. Your capital will just get crushed. But yeah, this is the 3X home builders ETF. What are its top holdings? Yeah, DR Horton, Lennar, those are the main home builders. Lowe's, Home Depot. So yeah, that's something you want to swing trade. Definitely not buy and hold forever that thing. What are your main types of investing, like dividend investing, long term? Yeah, basically, I'm a long-term investor that sometimes swing trades. Like if I no longer believe in a company or something, I might trade it or sell out of it or something. Hey, Jada, thanks for the rose there. I really appreciate that. If you got a stock you want to look at, let me know. So here's Neo. Here's a stock that it's just hard to trust this one. Like if you look in the top right, look at the market cap. It's a $15 billion company. So they are Chinese. They're up. Wow, I didn't actually hold on. They're up 17% on the day. There must have been some sort of good news. Did they report earnings? You know what? I don't know. I don't really want to look into that. But here's why I would be really careful with Neo. Again, $15 billion company. And, a lot of that market cap just came from today's 17% gain. So 17% of the market cap just came from today. But this company is losing a bunch of money. $1 billion this quarter, $1 billion last quarter, 700 mil the quarter before. I mean, the trend isn't exactly getting better. So that's why I'd be really, really careful with Neo. Just the fact that they're Chinese and they just burn net income. They lose a lot of net. So, J.I. said, Costco put me up $1,200. Yeah, man, Costco. This is a great company. Another very well-run business. You have to have a subscription to get into a Costco. And so they make money every month off the subscription. And as a consumer, whenever you go there, you buy stuff in bulk. So you feel like you get a good deal. And check out the net income. They're growing their margins as well. Margins are up, 5% year over year. Margins are really what you focus on for grocery stores like them. But yeah, they're making a boatload of money, 1 to 2 billion of net income a quarter. They pay dividends. They sometimes do special dividends. So yeah, Costco, I want exposure to them, but the valuation's too high right here. But they deserve the high valuation. User said UNH, please. Yeah, we can do UNH. So this company just bought, or this company was just bought by Warren Buffett. Warren Buffett just bought a huge stake in this company, and that really made the stock go up by like 15% on the day. Warren Buffett bought his shares at like $314 average, and it was disclosed to state that he bought them. It was at 272. So you could still even today get in at a lower cost than Warren Buffett did. But again, it basically showed like Warren Buffett always does his due diligence, doesn't like to buy crap. So there's something more Buffett season here. Again, just because someone does something, you don't always want to follow it. I'm staying away from this one for right now, just because the, the money they're making is about to collapse. So if we look at this net income right here, this EPS, it's normally like if we zoom out right here, it's always, besides that one-time adjustment, it's always $6. But if we look at the analyst expectations, in 2 quarters, it's expected to be $1.70. It won't even be able to afford the dividend. So that's why the valuation's so low. The net income is expected to collapse. There's a lot of government regulation, but I do like this one, and I think I wouldn't buy this one honestly over 300. For me to buy this one again or put money into this one, I'd want to see it under like 290, just to have a little bit more of a safety net. But because there are a lot of risks still on UnitedHealth, but they're pretty interesting. So someone said CoreWeave. Hey, that's a stock owned by Nvidia. If we go to the Nvidia portfolio right here, Nvidia is so big they own some individual companies. One of the stocks they own is CoreWeave. Oops, there we go. So yeah, if we go right here, yeah, CoreWeave is 85% of their portfolio. So Nvidia owns a lot of this stock right here. They're up 5% on the day after kind of puking from their $190 all-time high. I believe they acquired CoreZ, which is like a Bitcoin mining company they acquired. But anyway, if we go right here, this is the one thing I love about CoreWeave is how growthy they are. Like, look at this sales. They literally went from 395 mil to 1.2 billion in 1 year. Incredible growth of the sales, but you still got to be careful. They are losing net income every quarter, but still, it's pretty cool. I wonder if we can see right here. CoreWeave's chief directing officer sells 57 mil shares. Oh, well, anyway, pretty cool. Nvidia owns them. And again, just because Nvidia owns them doesn't make it a buy, but I love how growthy the sales are. What happens? Yeah, hey, Cross there. If you want to get this app I'm on, it's actually a brokerage where you buy stocks and stuff. It's in the link tree in my bio. It's that very first link there. It's an affiliate link too, so if you sign up and deposit $100, we'll both get 5 free stocks. Or you can just type it into Google. It's a brokerage called Moomoo. You just type it into Google. But anyway, link tree in bio, first link. But here's Cameco right here. This is my favorite uranium play. So look at this stock. It's nearly at an all-time high right now. That's because of how growthy and momentum the nuclear energy industry has been. And nuclear energy, sorry, I'm stumbling my words here, is powered by uranium, that yellow cake uranium. And, half the revenue comes from uranium. This is the best pure play for uranium. We're no longer ordering the Russian uranium. We're ordering it from Canada. And this is a Canadian company, of course. But yeah, so we'll switch their currency from Canadian to USD. But yeah, they made 235 mil of net income this quarter. My favorite uranium play. If you wanted exposure to uranium, you could also just buy ticker symbol URA. This is the Global X Uranium ETF. But to be honest with you, a lot of these other uranium names are trash. The best one is just CCO, Cameco. Then maybe UEC. UEC owns one mine. They bought a mine from uranium mine from Rio Tinto for like 500 mil. But anyway, let's see. OKLO is better in my opinion. Oh yeah, OKLO was the second largest holding. Actually, I'll pull up OKLO for you. This is another nuclear play, but this is mainly a momentum play right now because this is a startup. If you didn't know, DS, they just move with all the nuclear and uranium names right now, but this is a startup right here. So if we go to the revenue right here, it says no data because they've never sold anything. They've never sold a product or a service or anything. So there is no revenue. They're losing net income every quarter, but they're backed by some smart people. But I'm being careful with that one. I believe they have no debt as well and a lot of cash. But yeah, industrial stocks have been up an insane amount. Yeah, you're right, dude. My United Rentals is doing great today. Someone said LAC. Is that Lithium America? So yeah, to be honest with you, this one is not great because it mainly just follows the price of lithium. So if you go and look at the actual commodity price of lithium, it looks just like this stock chart right here. It doesn't look great. So that's one thing I would be careful with. Luckily, they have a good balance sheet. But let's see, sales. I wonder if that'll pull up right here. Yeah, sorry. There is no sales. That's why I said that. So there's no data for the sales here. Okay. Another startup. How you feel about XRP? I missed the time. Yeah, XRP is a crypto. We don't really look at crypto, but you know what? I'll pull it up for you because why not? XRP and thoughts on PODD? Yeah, we'll pull up that one too. So here's Ripple XRP. Yeah, look at that. It's pretty close. We're pretty much at an all-time high. So yeah, congrats if you own this one. But yeah, you think with crypto is like you don't get a yield on it. I love dividend stocks, like companies that pay you some cash back every quarter. Companies that can buy back their own shares. But also that's a cool, unique feature of crypto is like they don't report earnings, so they can't miss on net income. XRP can't miss on margins or something. So let's see. PODD. What's this one? And then John said, can we look at CELC? Yeah, we'll look at CELC. Is that Celsius? Or no, I think that's a different one, but we'll look at CELC. So here's PODD. This is Insulet. I've never heard of this company before, but they're a $23 billion company. And look at that. The stock is at an all-time high today. So yeah, congrats if you own this company. So let's see. Omnipod Products. So that's 98% of the business. That's interesting. So let's see. The sales, the revenue's up 32, but the net income fell by 88. That was actually a one-time adjustment. So look at this. They're having these weird one-time adjustments. It says they only made 22 million net income. They actually made a lot more than that. So the valuation of this company is a lot lower than what they say it is. So that's probably why the stock is doing so good, because of this operating profit right here at a new record, up 122%. That probably explains why the stock's at an all-time high, even when the net income has collapsed. Welcome back. Hey, what up, Ash? Hope you're having a great Friday. Everyone's having a great Friday with how Jerome Powell blessed us with the Green Day. Looks like our portfolio is starting to slip a little bit here, but still, we're up 2.2% on the day. Yeah, CEG just went negative. Yikes. So little healthy pullback. We'll just call it a little healthy RSI retrace. Oh, yeah, look at that on the Qs. Look at that. It is kind of falling a little bit. Should I sell my shares on stocks that end up flopping? Yeah. Unless you should, first off, you don't buy those in the first place. The best thing to do is to not buy those kind of stocks in the future. Someone said SCY. Yo, Andy, let me know which SCY you're talking about. There's like, look how many different ticker symbols. There's Sun Communities, SCY, the crypto, or Superior Mining. I think he means the crypto, but I don't know. They make insulin pods. Oh, yeah, hey, that company was doing really good. Only tubeless insulin pod on the market. Hey, what was the ticker symbol for that company again? That was a PODD. Oh, yeah, and look, Insulet is the company name. So, hey, that's really interesting. The stock's at an all-time high. So, yeah, hey, pretty cool. What up, Richard? Money, what up, dude? Hey, good to see you here. Why do you still own PSIX, and why do you put that money into another company? Why do I still own them? There's no reason to really sell out of this company right now. They just had incredible earnings. I didn't buy them to like short-term swing trade it. I bought them because I think they're going to be a winner in the long run. And I bought this stock at all-time highs. Like the exact day that I did, it was basically at an all-time high. And then it just continued to hit new all-time highs. But let me show you why I love this company and why, I would want to sell out of a company if I no longer believe in it. And their earnings just reaffirmed why I believe in this company. I mean, look at this versus what the analyst expectations. The analysts were expecting 130 mil of revenue. They made 190 mil of revenue. Analysts were expecting 87 cents of net income. They made $2.20 of net income. It was a huge beat on a quarter. I mean, the net income hit a new record. Revenue's up 73. Net income's up 137. So that means they're growing their net margins. I mean, everything on PSIX looks great. They're deleveraging their balance sheet as well. So yeah. I'm thinking of another company you own, not PSIX. Oh, I don't know then. Here, maybe you're talking about Zoom or something. Yeah, here's some of my bigger losers, by the way. I love being fully transparent. Check this out right here. So, yeah, we are down. Oops. Yeah, we're down bad on like UiPath, Zoom. Actually, Zoom is up 11% on the day, but even after being up 11%, we're still down 46% on them. But anyway, yeah, we're up 2.8% on the day in this portfolio. Not too shabby. So, yeah. Yeah, I'm not sure which one you're talking about there. Yeah, I'll give you a quick update on my Webull portfolio. This is my portfolio where I kind of mess around with some riskier companies. Like I got SoFi, Robinhood, Calm. I love Calm, man. That's a chicken egg producer stock. Progressive, Reddit. Dude, Reddit has also been an incredible performer. Yeah, I saw them one earlier, never got to it. I guess I don't think that person's still here, but you know what? I'll go over Reddit just because I really like this company. So a lot of people think Reddit is just some meme stock, no good fundamentals there, but this company deserves to be doing really good because of how good their financials are. So Let's analyze them over here. So here's Reddit. This is a $200+ stock. And look at how growthy they are. Like if we judge Reddit based off their financials and not their name, they're really impressive. And dude, my internet is bugging right now. It does not want to load the revenue, man. And it's like, I don't think it's my Wi-Fi either. I think it's just because I've had this app open for like so many hours. It just doesn't want to load it. Actually, I might reset the app right here. Damn, bro. All right, we're going to reset it. Oh, well. So I appreciate y'all being here. By the way, if y'all wanted to follow on, we go live every day, twice a day sometimes. But and I sell nothing. I have no course, book, or anything. So here's Reddit right here. Let's pull up the data. So here it is. Here we go. Revenue, look at this. Here's what's incredible about Reddit. The revenue is up 77% year over year after being up 53% from the previous year, but revenue's up 77 and they made a record net income quarter. 90 million of net income just this quarter, and they have a fortress of a balance sheet. They actually have no debt at all, zero debt, over $2 billion of cash on hand. I mean, Reddit is just crushing it. The free cash flow numbers are incredible. Look, Tencent, another stock Tencent owns. They own 6.63% of all the shares of Reddit. So I love them. So let's see. Did you do Eli Lilly? We have done Eli Lilly, but I can do it again. Let me know if you want me to look at it. I'll do it after this one. So here's Hims and Hers. I'm also coming up to that kind of end of the stream here. So I do really appreciate y'all. So here's Hims right here. They kind of lost their growth after they're no longer able to sell a weight loss prescription. So this company used to sell a weight loss prescription on their website. It led to a lot of growth in the sales. But now they no longer sell it, and that's going to hurt them in the future. But for right now, they're doing pretty good. Revenue's up 72% year over year. That's incredible. The free cash flow, actually, the free cash flow just went negative. So they must have invested in something. I don't know. That's all right. You don't really. It's okay that just happened just this one quarter. So anyway, the profits on this company are ridiculous. They're now going to be making over 200 million plus in net income a year. I mean, the revenue's up 70. Net income's up 200%. They also, if you're wondering what happened to their balance sheet right here, their assets just went up with their liabilities because they issued $1 billion of debt, and that rose them $1 billion of cash. That's how their cash went from 330 to 1.14 bill. So that's no big deal here. Assets just went up with the liabilities. But anyway, Hims, I think the risk to reward might be pretty decent here. I heard it's going to be rebranded as theirs to be more inclusive. Oh, really, User 6? That would be actually really interesting. I know they don't actually own any, like, they were selling literally Ozempic on their website from NVO. So I wonder who they're partnering with now. Hey, that'll be interesting. Maybe they're partnering with Eli Lilly or something. But here is actually Eli Lilly stock. They also sell a weight loss prescription called Zepbound. And one of the reasons Eli Lilly fell so much in earnings was because they made, instead of a weight loss injection, they had this weight loss pill that you take. And basically the results came out and said that it just didn't work. So the pill version of the prescription didn't work. And the stock fell 100 billion on that market cap. I'm like, this is oversold. I think it's going to recover. And it did recover. It's because they beat on every metric. Huge beat on revenue, huge beat on net income, and huge beat on EBITDA. It was a triple beat quarter. The net income grew by 90%. Just incredible quarter for Eli Lilly. So to see them fall, I was very surprised, and I do like them. So that's the deal there. So that's pretty much going to wrap up the stream. I hope you guys have a great rest of your Friday. I mean, the market is on fire today. Look at that. My main account, we're up 2.3% on the day. And the only stock red in here is CEG, Constellation Energy. Not too sure why they're green, but hey, no big deal. The Roth IRA is just a tax-free retirement account. It's up 1.6% on the day. So what's cool about the Roth IRA is if you double your money on a stock and then sell it, it's completely tax-free even then. So and then of course we have our buy and hold portfolio. This is our Moomoo account. If you look at the top left, it's called buy and hold because once I buy a stock in here, I try not to ever sell it. I just keep it on or just keep stocks in here for the long run. Wow, Amazon's now up 2.45%. Incredible day on Amazon. And then finally we have our growthy portfolio. This is our Webull account. We are up 17% all time. So we definitely have not outperformed the market, but So here's actually, let's see how they're doing today. FUTU was up 6.5, Zoom was up 10, Dave is up 6, Disney's up 2. So SoFi's up 7, PSIX is up 8, T-Ro's up 4. That's a great day for T Row because they don't usually move much. I love my Roth. Just gotta hope can live to 55. Or yeah, hey, well, here's another cool thing about the Roth IRA. So yeah, you can't withdraw the money till you retire unless you're a first-time house buyer. So if you've never bought a house before and you're a first-time house buyer, you can use all your money in your Roth IRA tax-free as a first-time down payment. So, and if you have like some emergency medical expense, you can also withdraw from a Roth IRA tax-free. Or if you're just like, I want to withdraw the money early, you'll just pay a 10% extra tax for withdrawing it early. So yeah, again, none of this is financial advice, not tax advice. But yeah, anyway, that was pretty much the stream. So yeah, if y'all want to hit the follow button, I appreciate that. We'll be live. I'll probably do another live stream later tonight. But yeah, I hope you have a great rest of your day. I'll see you guys in the next one. Hey, best way to support me, by the way, for y'all, the YouTube stream is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, or you can just type in YouTube Nathan Robert. I'm also streaming on there, so if you missed anything, you can. The beginning of the streams are really fun, so check out the beginning of the stream. Yeah, my YouTube channel is called Nathan Robert. You can replay it on there, and yeah, hope you have a great rest of your day. Thanks for showing up. I'm trying to build up the YouTube channel, so hey, thanks. And thanks for y'all on the YouTube stream. Y'all are the best. Y'all are the real ones. See you later, JVM, Richard, Ash.